You need to watch this video if you want to stop losing trades pointlessly. I'm going to teach you about time-based liquidity, why they are important, and how you can actually use them to validate trades, avoid losses, and make good money. If you've been trading ICT concepts or smart money concepts, you would have some knowledge on liquidity and probably use them in your trading. But you may have also noticed that some of the liquidities you expect price to react from don't work, causing you unnecessary losses. The reason those liquidities you draw out and expect a reversal from don't work is exactly what I'm going to be educating you on in this video. What I want you to understand is that there are high probability and low probability liquidities, especially for intraday traders and scalpers. The low probability liquidities are the regular old highs and lows or equal highs and lows found in the market. And the high probability ones are time-based liquidities. Time-based liquidities are simply liquidities created within a period of time or session, which are then grabbed in the following session. And this happens every trading day, allowing for high probability repeatable trades. Without wasting any more time, let's go on chart so I can show you how to know which liquidities are time-based and how I use them to take quality trades. Alright, so where are time-based liquidities found? Now we find them, like I explained initially, you can find them at the highest or the lowest point created within a certain period now or a certain session. Now when we talk of sessions or periods, from the start of a new day to the end of a new day, that is a certain period, right? From the start of a session to the end of a session, that is also a certain period. From the start of one session to the end of a third or a second session, that is also another period. Now the period from the start of a new day, right? The day starts here and the day ends here, right? This is one day. Now, when another day, obviously, when the day ends here, another day starts, right? And you have another day starts here, you have what? The second day. Now, when we are trading in this day, what do we refer to this other day? We refer to this as the previous day. So, the highest point, for instance, highest point and the lowest point in this entire day is the previous day's high, right? This is the high, and let's zoom in, and this is the low. So this is the previous day's high and this is the previous day's low. Now in that previous day, let's take out some things there. In that previous day, there would be sessions, right? In the entire trading day, we could have sessions. Now we could have, would have, not even we could, we would have Asian session, would have London session, and would have the New York session, right? So let's shift this a bit. Good. So this would now be labeled, this would be labeled Asia, right? This would be labeled London, and this will be labeled New York. Now in each of these sessions, they all have their highest and their lowest points, right? So this is the lowest points in Asia and the highest point in Asia. This is the lowest point in London and the highest point in London. But since we are going to be trading New York session, we don't take note of the highest and the lowest point in New York. So we're just taking note of Asian and London. So where are time-based liquidity is found again? They are found in the previous day. So the high and low of the previous day, when you mark that out, you have the previous day's high or the previous day's low. And overnight high and low. What are the overnight highs and the overnight lows? I said something when I was drawing this out. I said that we could have, in an entire day, we would have one session and would have two sessions. And one session, the start of a session to the end of the session, is going to be a period in the market or in that particular day, because it's from a start to an end. Now, when we have the start of two sessions, is also going to be a period. Now, the overnight, when we speak of the overnight liquidity, my students know this very well. I love it so much. It's actually the combination of Asian and London. So where is the highest point? So it simply means you're going to be taking out the demarcation between Asia and London, right? So where's the highest point in Asian session and where's the lowest point in Asia and London? So if, for instance, we had the market deliver price like this now, so where's the highest point in all of them and where's the lowest point in all of them? That's the logic. So this creates your overnight low and your overnight high. I'm going to show you on charts. It's going to be way easier, but I want you to understand this concept so when we get there, it doesn't become difficult. Now for session highs and lows, just like you have a session start and an end, Let's say this is the Asian session, for instance. The highest point is known as Asian highs and the lowest point is known as Asian lows, and that is also Asian sessions high. I don't know if you understand me. So it's also a session high or a session low. This is where time-based liquidities are found. Before I go, let me do a recap. TBLs are found in where highs or the highest points, let's put it like that, the highest point, that's not spelled correctly, but I don't want to type it in full. Highest points or the lowest point within sessions, within sessions, or what, or periods. The camera is going to be shaking because it's on my desk, so if I'm shaking my hand, it's going to be shaking as well. So just take note of that and be don't be disturbed about that, so bear with me. All right, so now where when we say highest and lowest points, we're talking of highest and lowest points in, let's type that out, highest and lowest points in, okay, that's too big. Okay, let's have it here. Highest and lowest points in Asia, in London, right? In Asia, in London. Let's expand this. It's been a while since I did these kinds of videos, and it's so cool and so fun, so stress free. Asia, in London, and previous day. Since you're gonna be trading New York, right? I'm not including New York. Previous day, and one more is Asia plus London. Asia plus London, right? Asia plus London, which is the overnight, which brings the overnight liquidity. Overnight, overnight. I like to abbreviate this as ONL, just in case you see it while I'll be showing you what I'll show you on chart. You'd have it as overnight liquidity. That's usually what you see it as, or overnight liquidity high, right? Just in case, but I usually like to have it as overnight liquidity. So yeah, that is that's just explaining where time-based liquidities are found. So we're going to be going into how to spot them. All right, so right here on the chart, how do you spot these liquidity pools, just like I've drawn earlier? Now, first things first, you're going to be needing to have your time zones to New York local time. To have your time zones to New York local time. I am on FX replay currently, just in case you're wondering. It looks like a lot like TradingView. I'm on FX replay. So you have New York local time. Also, you'd want to have session breaks active. So if I click on this, you see I no longer have the session breaks. If I bring it right back, I'm gonna have session breaks. So you could just search on settings how to get session breaks, right? Just search session breaks on settings, and you're gonna on the search bar, right? And you're gonna have it. So how do we mark this out? We're gonna be marking for a couple days so you can spot them easier. So let's do for this is 1 day, 2, 3, 4. So let's do for the last 4 days. All right. So right here, we're gonna take a vertical line and place it on midnight. We're gonna place it on midnight of New York, right? Midnight Eastern time, New York local time. If your chart is not in Eastern time, you're gonna be doing something entirely wrong. And then the next is gonna be on 8:30, 8:30 Eastern time, right? So now, what does this provide us? What does this provide us? Now let's mark out all the liquidity pools, all the time-based liquidities. Now, all the time-based liquidity present. So first things first, remember we have previous day. So where the session break starts, where it ends and where it begins, the entire session there is the previous day's high. Remember, we're in this day, but this is what we're looking at now. So we're going to mark this out and we're going to be labeling that as previous day's high. So I want to have that as previous day's high. So PDH, that's what it is, previous day's high. And also let's have that at the top left here, top left. So that's previous day's high. The next is previous day's low. Next is previous day's low. So let's make it neater. Let's make it a bit neater. That's previous day's low right there. The lowest point between the period separator, like the way it starts and where it ends. So we'll have that as previous day's low. As we go on, I'll stop labeling. I just want you to see them right now, so we don't waste too much of time on the video. So that's previous day's low. I want to have that at the bottom. Okay, and now we've marked for the previous day. That is one. The next is we are in Asian session. So the space between the period separator and your midnight, wherever it is you marked your midnight, New York local time, please. So the space between between your period separator and midnight is Asian session. So the highest point there is going to be regarded as your Asian highs, right? And the lowest point is going to be regarded as your Asian lows. Now, this is going to be way easier for you because I'm not telling you to, like I tell my students, from this time to this time is Asian session, from this time to this time is London session. And in London, inside that London session, there's still a smaller time which I tell them to go and trade because that's highest probability time to be trading. But for here, I'm stripping it down for you. I'm telling you exactly how to use lines to know what session you're in. So that is Asian session, and so I'm going to be labeling this. This is going to be on the top as A highs. So A dot highs, have that as A highs. Right, this camera is shaking like crazy. Okay, and then we'll have this on the bottom, beautiful, as A lows, as A lows, A lows. So that's Asian lows, just in case you see that on my charts as well. If you join the free community and you see my analysis, there's a link to the free community in the description. If you join and you see me label my chart like this, so you know exactly what I am doing. So that is that. And the next is going to be London highs and London lows. So London lows is the space between your midnight and 8:30 that I asked you to label initially. So that is London session. So we have London session lows and we have London session highs. Right, I like to label the London session as LDN, right? LDN. So that's LDN. I don't need to make it lows or highs. I just like to label it as LDN, right? So that is that. We've got previous days, Asian, London, and we don't need to mark out New York because it's in New York we'll be framing trades from, which I'll also show you. So we have previous days high, we have Asian, London, and New York. Now I'm gonna take out all the annotations and do it neatly. I don't like to have annotations on my charts, but it's important you have them, but I don't really like to have them. So let's mark out the 4 days, like I said. So we just have this at midnight, and we have this at what, 8:30. What is it, 8:30 now? 8:30. Beautiful. So I'm not going to be using this. So this is your previous day's high, previous day's low, Asian low, Asian high, London lows, right? London highs. And that is that for that day. Let's take that out and mark for the next day. For the next day, we have midnight and we have 8:30. Right, we have 8:30. So where is our previous day? This is the previous day's high. This is the previous day's low, right? That's the previous day's low. I don't want to extend it too much now. Okay, that's the previous day's low. Now we have this lowest point here to be Asian lows, and we've got relatively equal highs with the previous day's high. I don't know if you can see it right there, but let me mark it out so you can see it. It's almost equal, relatively equal. So that's Asian high. Okay, actually, let's zoom in. That's not the lowest point to Asian. This is the lowest point in Asia. Yes, it's a swing low. I have a way of noting swing lows, but I don't want to go into that. We're very detailed with this video. So this is London highs, and this is London lows, right? I'm going to be telling you something later on. You'd see a similarity between all of them. Let's move over to the next trading day. So for the next trading day, we need to mark out midnight and what, 8:30. 8:30. So let's zoom in. We have choppy price action there, so we're going to be zooming in to be able to mark it effectively. But first things first, what's previous day's low? We've got previous day's low right here, right? And then we'll zoom in to be able to mark out Asian and the rest of them. So we have this to be Asian low, that's the lowest point, and we have this to be Asian high, that's the highest point. And for London, we have this to be London lows, right? And we have this to be London highs. You see that right there? It's super clear. I'm moving over to the next day. For the next day, we're going to be marking the lowest point. So let's just extend this. That's previous day's low, and this is previous day's high. Just take note as all these liquidities get swept on one side or both sides. And we'll have that to be midnight, and we have 8:30 to be somewhere around here. Beautiful. Oh, I'm on the wrong two. Okay, we have 8:30 to be here. That's 8:30. So you see it. So we're marking out. We've already marked out previous day's low and high. So we have Asian low, right? See, it got swept clean, and Asian highs got swept neatly. We've got London lows. Sorry, we've got London lows. No, 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 no. This is London lows. Yeah, that's London lows right there, and we've got London high. It's looking complicated now because I'm trying to mark everything at the same time so you could get to see it. Okay, so that's that. We've exhausted all the days we have. Now you can see that this liquidity forms every day, and at least one side is taken every day, which helps you frame trades. Now let me show you. Let's go back to everything we've marked. Okay, we started out from here. One of them must get run in your session. Now, what is your session? Remember, your session is here, the New York session, the side that we did not mark. Sorry, I want to get this too instead. This is your New York session. Let's get another New York session. I mean, too many lines. It's looking very confusing. I'm going to clear this chart right away. Right away. Okay, let's just leave it. Too many lines. Too many lines. Too many lines. But you see how I marked them. So let me clear them so you could see it properly. Okay. I think I've got OCD because I like things being very symmetrical. So I'll follow you and show you how they are gotten cleared or how they get cleared every day. So that's 8:30 right there. Now we are marking out the overnight. The overnight is going to be the highest point from period separator to 8:30. I didn't even say that. Thank God I just remembered now. So this is going to be overnight lows, and this is going to be overnight highs. So you can see the overnight highs got taken in our session. Let's go to the next day. We're looking for 8:30, 8:30, 8:30, 8:30. What's that now? Okay, that's 8:30. So we see that overnight lows, and overnight lows are same as London lows in this case. But here, overnight lows are same as Asian lows. So remember, the overnight is a combination of Asian and London, just in case you've forgotten. So we have 8:30 here again. Yeah, right there. That's 8:30. And on this day, we've got the overnight highs right here. It's a relatively equal high, and we've got the overnight lows down here, right? So overnight low serves as previous day's low, which got grabbed in what's happening now, which got grabbed in the next day, I think. Okay, it didn't get grabbed. It didn't get grabbed. Actually, it went for something else. So that's that one. On to the next day, 8:30. On to the next day, that's 8:30 right there. Overnight lows, we've got this low, right? An overnight high. I'm sure you guys are thinking, how do you now use this take trade? You're gonna see. So simple, right? So you see that the overnight lows and the overnight highs got run on this day, and that was the same thing when the Asian highs and the Asian lows got run, right? So yeah, that is that. That is that. So let's play forward and let me show you how you can use it to frame trades. So now I'm going to be having to keep my midnight open, and let's look for 8:30, 8:30, 8:30, 8:30. Okay, 8:30. So we're going to play. What we're going to do now is this. We're going to play price forward and see. First things first, I'll mark out the liquidity pools and we'll see which gets taken in this trading day. So the one closest to us, you don't really need to go so far to mark out previous day, except price is close to previous day. So the one closest to us here is I see the London highs and the London lows. Okay, let's play up to 8:30 first, because that's where we're coming into the market. Let's play up to 8:30. Okay, let's use this based on 1 hour speed. Okay, let's go back to the 15-minute speed. Okay, so you even see that we've actually taken our previous day's high already in London. Okay, so that's that. So we've taken our previous day's high already, so it's not even part of our criteria anymore. So for the lows, we've got Asian London lows, which is like relatively equal lows with Asian. So we just take out London, and that's our overnight highs. and we take out uh we mark out, sorry, this to be our, what am I saying? This is our overnight lows and this is our overnight highs, and they are, it's the same thing as London highs and London lows. Taking our previous day, so let's see if price would do something like this or do something like this. All right, so let's see. But one or two sides should be taken. Let's see. Let's see what happens. Okay, highs taken. Are we gonna go for the lows? Are we gonna go for the lows? We should. I don't know. Okay, so it's just a straight day, probably. Just a straight day. But yeah, we took out the highs, and you probably might not be able to frame trades on this day. But then yeah, we took out the highs. So let's look for the next day. Let's look at the next day. Okay, so now on the next day, we'll just take price to 8:30 and start our analysis from there, right? And I'll show you how to actually frame trades from this. So let's play up to, let's keep this at 8:30 so we don't play past 8:30. So you can see exactly how you can frame trades from this. Just liquidities, time-based liquidities. They are so powerful, so powerful. Let's play one more. I think one more. Okay, so let's use the 15 minutes now. Play into it. Beautiful. So we'll zoom in and mark out what we have. Mark out what we have. So we're close to the highs. So we have this. Take note of this. Take note of that. We'll take note of this too. This is the highest point in London, right? So take note of that. And we'll take note of the lowest point in London too as well. And the lowest point in London as of today is serving as our, what's it called now? Overnight lows. So let's play price forward and see what side gets taken. Seems like we're gonna go for the lows first. Okay, beautiful. The lows are taken. And now when this happens, the next possible place we are coming for could be or should be the highs. So I'll be on the lower time frames and anticipate what could potentially happen. So we're going to be taking this to 1 minute speed. Let's see. Let's see what happens. We're trying to take a trade now. We're trying to take a trade here. Okay. Okay. We're close to 9:30. So I'd like to take a 9:30 trade instead. I'd like to take a 9:30 trade. What's this now? 9:23. 9:23, 9:25, 9:26, 7, 9:28. Okay, 9:28. So I would want to see these highs. Excuse me, Claire. I want to see these highs run at 9:30 and I'd buy and I'll have at least a 1 to 2 risk to reward ratio. So it's 9:28 right now. So try to do this. Let's keep our long position here. Our shorts, where would our stop loss be? That is going to be solely dependent on where the 929 candle prints. That's where that would determine my stop. Let's see. All right, so 929 candle has printed, so I can confidently keep my stops below structure. I like to keep my stops below structure, and I want to take a clean 1 to 2. Okay, so if this broke this low, so I can extend, I can bring this exactly to that point, so I can have a very neat 1 to 2. And yeah, so let's see how this one goes. Let's see how this one goes. Oh, boom, stopped out. Okay, it's 9:30. If we got stopped out on this, I'll have another one. I'll take another entry. This should be the last. Ideally, it should be the last. This should be the last. I'll take another one and keep my stops just below. So let's see what happens. Okay, beautiful. Okay, now this is a trade where this is a place where your stop should actually be below candle closures. Below candle closures, right? So ideally, I'm not in this trade yet. Remember, I'm only gonna be in this trade after this happens. I don't know if you understand what I'm saying. After price breaks out from this high, that is the only time I would be in this trade. So if you were here, if I was trying to buy from here all along and this broke, I wouldn't have even gotten stopped out. Why? Because of I'm buying at the breakout of these highs. That should make sense to you. That should make complete sense to you. So you should understand that. that is where my entry should be. So now, if you want to place this trade, right, where should you keep your stops? Below structure, where should your entry be? At the high, this is the current structural highs, right there. And a 1 to 2 will just be fine. A 1 to 2 is gonna be just fine. So let's play this forward and get over with this trade. All right, that should be it. Let us see. Let us see. At this point, you should be break even. Should be break even. Let's see what happens. It's gonna be a winning trade or a break even trade. All right, that looks like TP to me. That looks like TP to me. Let's see. Is it break even now? Yeah, it's a break even trade. It should be. Let's play too long. So we had too much of a wide range. Had too much of a wide range. Probably. I'll close out my trade. I don't want to be my trade this long. I'll close out. Ideally, I'll close out. Close out. Don't want to be in a trade for this long. Once your trade lingers this long, it's not going to work out. So I'd have my stops at break even, and it's going to ideally be a break even trade. But this should have been a take profit trade if we had a tighter stops and we just if we have like a 1 to 2 here. Do you get me? Like if we had this would have been the case. But well, that was not what it was. So fuck it. Over to the next trading day. So that's just one day. Over to the next trading day. We'll have this to move at 15 minutes or 4 hour speed, so just get there faster. Okay, we're on the next trading day. Okay, so we'll have to keep this at 8:30. 8:30. I'm doing this in December because in December you'd have the worst price action, so you guys can actually have a glimpse of what it's like. So in December you have the worst price action, the worst of the worst price action. You feel me? So that's why I'm doing this in December. So and it's also very recent too, so it makes it even easier for you. All right. So what do we have here? Let's see what liquidities are close to us right here. So we have this point. Right, this is the highest point before 8:30, so we'll just mark that out. That's highest point before 8:30. This is where 8:30 open, and that's the highest point. And for the lowest point, we have this to be the lowest point before 8:30. So we'll just go to lower time frames now and see if we can potentially look for sell trades. We're looking for a shift in structure intending to go towards this other liquidity, but we just want a 2 hour or a 2.5 hour, and that is all we need. So let's see. Nothing yet. Nothing yet. That's not a proper one. Okay, right there. I like what I see here. I like exactly what I see here. So we're going to be having our short trade. This is a shift. This is a shift in structure, right? This broke these lows and had a fair value gap created. Right? Had a fair value gap created, and exactly there is where I should be selling. But since we're late on it, we have this right here, and potentially our stops should be above candles. Stop should be above candles right there, and let's have a clean 1 to 2, a clean 1 to 2. So let's see. Let us see. Where does the 3 minutes candle stop? Better. I prefer that. I prefer to use that, so we don't have too much of a range. Okay. Okay. So let's see. Let's have that trade. So let me try to place this trade. Let me show you guys how to place a trade here on FX replay. So let's risk this is $1,000 account. So let's risk $50. That's yeah, $50 is good enough. $50 is good enough. Yeah, it's 5%. Yeah, it's gonna be too big for your problem account, but if it's $1,000, it's probably gonna be a live account, right? So $50 is good enough risk, and I want to sell this sell side. Yes, instant execution. That's what I want. Yes, of current balance, 5%. Your lot size is gonna be 3 lots. That's gonna be your entry. And I think type sell by market not limit. So save that, and let's see. Let's play price forward. Let's play price forward and see what happens. Okay, boom, TP hit. You see, compare this trade to the previous trade. The previous trade was wasting a lot of time to tell you that okay, this is not actually a high probability setup. But when it is your setup, it hits like it's usually in minutes, literally in minutes. Okay, so this was done on Nasdaq. So you can also do this on other indices markets. I've not I've not given the go ahead yet for myself to trade this on currencies, but I do this on indices. My students have tried it on gold and they've tried it on forex pairs. But for you learning this from me directly, I recommend do them on indices because of you have volatility at 8:30, at 9:30, and at 10 a.m. Very, very important. Very important. So alright, let's go to US 30 and see this. Okay, so we're here on US 30. What date is this? Okay, it's already past 8:30. Oh, bloody hell. Okay, so and this is also NFP day. So let's go to a new week. Let's go to a new week. A new week. Start of a new week. Mondays are not the best trading days. Personally, I don't like to trade most Mondays except proven otherwise. But let's see how this works on a Monday. So Monday is 9th. So we're gonna do the same procedure over again. Midnight, midnight and 8:30. Midnight and 8:30. Right there. So let's play price through that point. Let's play price to that point. Okay, that's that. Clearly at 8:30, I see us running overnight highs. So we're already running London highs, but this Asian highs, which also stands as the overnight, is yet to be run. So let's use that. Previous day's low has been taken in Asia, so we don't need to use that information. The next time based liquidity we've got is London. So we have London here. Let's see what happens. If we take out from the look of things, since we're very close to this, price may just run this and we go down. So let's go to the 1 minute and track how this happens so we potentially don't miss any trades. So potentially don't miss any trades. Let us see. Let's use this at 1 minute speed. So we want to see this is US 30 and 9:30 is more volatile on US 30 than on Nasdaq. So I'd like to take a trade around 9:30 so I could use that speed to get take profit hit really fast. Okay. Okay, we're having a shift. This is 9. What's this? 9:18. We're having a shift in structure already, but I want something that would play out at this time. I want an entry around 9:30, 9:30 to 9:40. This is when I would like to have my entry. So let's see if we could get something at that time. This, mind you, this may drop or 9:30 liquidity may make this go up for this. I'm not teaching you all of that complexity, right? But when I'm done with this, I'll show you the simple way you could use this. So this is actually how you're using stake trades. I'll show you what time and a step-by-step process through which you could use it. Okay, so this is what I was saying that we would potentially come for this. So we're close to 9:30, really close. So we've taken out those highs, making 9:30 higher probability for sales. Let's see. Okay, it's even surging up more. That's like power of three happening right there. Okay, so this is 9:30. This is 9:30 playing out. All right, 9:29. So let's see what happens at 9:30. Oh, 9:30 has another spike to the upside. So let's take this out. So we're going to be very, very. What are we looking for now? Let me show you what we're looking for. So what I want to see is price after surging higher highs takes out a low. Before taking out that low, I want to be using sell stops below that level. And when I have price come here, I am in and my stops are both candles and I can ride it for a 1 to 2. This is what I want to see play out here. But let's see. It might not play out because it's a Monday, but if it plays out, beautiful as well. So let's play price further a bit. Okay, okay. I'd like to see something now. If we are breaking these lows, I should be getting an entry, but it should be a displacement rather. It should be a displacement of those lows, not just a week, just like this, because we are at critical times. So we've taken another high. Mm, taking another high. Let us see. Okay, so having this as the case, I think I'm ripe for entries. So because the 930 volatility, it's almost 940. 930 volatility might be dying down. So I think I'll ripe for entries. So we'd have our entries. Okay, this is actually this took out this lows, right? This high took out this. These were the lows that engineered that. So let's do this. Let's have it here. This is quite big. This is quite big. This is quite big. Um, Making adjustments to this. Let's see here. Okay, 58 points. That's. Let's play price one step further. Okay, 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 okay. Then I can have my stop loss now. I can have a better position for my stops, right? I like this. So we're taking entries below here, and our stops can be candles. Let's do our stop above candle bodies, so that we will have smaller stops and we can get to take profit faster. Since we have a wide range, we may just target these lows, right? Let's target these lows. So this trade, since it's a big range, it's a big ass range trade, it may take a longer time to hit. It may take a longer time, but let's see. Let's place this trade like we did before. So I'd like to risk the entire profits made on the other trade. So let's place that trade. We risk 100 on this. It's like demo trading, and it's gonna be that's gonna be a buy stop. It's gonna be a sell stop rather. Going to be a sell stop. So we're risking 9% on the entire account. Save. So let's play price forward and see. Beautiful. Activated. Okay. Looks like we're getting to TP faster today. Now, we may have a rejection to this order block created here. If we have a rejection to that point, I might add another entry. So let's see. If we don't have a rejection, beautiful. If we have a rejection to that order block, I will have another entry right there. Okay. Seems like we're not gonna go there. Are we gonna go there? Beautiful. Okay, so let's have another entry. I'm going to have another entry there. You shouldn't do this, but I'm showing you exactly how I use this to take trades. Now, how much would I risk on this? This trade is going to make me even more money. I'm going to be using the same TP and the same stop loss of the previous trade, but potentially going to make more money. So I'll just do $50 of risk on this one. So let's place that trade. We're going to do $50 of risk on this. So overall, I think I'm having like 10% of risk or more. Or more. $50 of the would sell by market. Sell by market. Save that. So yeah. So let's see. Are we gonna get burnt or not? We're gonna get burnt or not. Okay. So I knew that this trade was gonna take a longer time. So at this point, we should draw stop losses. This is how to do the trade management now. Take your stop losses to intermediate stem highs so you're safe in case anything happens. In case anything happens. Alright. TP hit. It's that simple. It is really, really simple. I spend time teaching my students how to trade this because it's actually what you need. It's what you need. You don't need too much. You just need something that's repeatable every trading day. That's all you need. Without wasting too much of our time, I think I have done enough examples. So take your time and watch this video again. Take your time and go through this video again, especially the parts where I'm on chart, so you could learn from this. If you want to learn other models I use, I recommend you join my mentorship program where I'll teach you exactly how I trade. The link to join the mentorship is in the description. If you have inquiries, send me a DM on Telegram. The link to my handle is also in the description as well. Until I touch base with you, be safe.